All right. Welcome, everyone. Ready for another deep dive?
Let's do it.
Today, we're going deep into the psychology of trading
Oh, yeah.
and how emotions play, sometimes in ways you wouldn't expect, a huge role in the decisions we make with money.
Absolutely. I think understanding this stuff, it's not just for, Wall Street hotshots.
Right.
This is for anyone who wants to make smarter choices with their investments.
Yeah, totally. I mean, everyone knows, fear and greed.
Right.
Those are the classic drivers of bad trades.
Right.
You get all excited, you buy high, and then
Heck.
market dips a little, and you're like, get me out.
Yeah.
Sell low. Classic buy low, sell high, they say, but then
It's easier said than done.
emotions just take over, right?
Yeah.
But I think even more interesting, maybe, is the role of things like overconfidence.
Yeah.
And the fact that we're just really bad at predicting how we're going to feel about something in the future.
Yeah. Yeah, absolutely. I think that's one of those things that often gets overlooked. These subtle factors can be huge. You think about something like regret avoidance, right? Where you're holding on to a losing stock for way too long, hoping that it'll come back.
Oh, yeah.
Or maybe you sell a winner too early because you're so afraid that it's just gonna, go down.
You just want to lock in the profit.
Exactly. Yeah. Or, you're unsure about a trade and you hesitate
Right.
and then you miss out. That's emotion at work too.
It's so true. It's like, seeing a wave building, but being too scared to ride it.
Yeah.
So how do we get better at this? How do we accurately assess risk while keeping our emotions in check? It feels like sometimes a real tightrope walk.
For sure. It is a tightrope walk. There was a study by Tochkov and Wolfert that really kind of gets to the heart of this. And they looked at how well people could predict their own emotions after a financial loss.
Oh, okay.
Yeah.
I mean, I've certainly been there. How did they even go about studying that?
So what they did is they had people imagine the scenario where they lost money,
Okay.
like in a gamble. And then they had these people rate, okay, how do you think you're going to feel about this loss?
Right.
And then a week later, these same people actually participated in a gambling scenario where they could win or lose real money.
Whoa. So they put their predictions to the test?
Yeah, exactly. Putting it to the test. So did people accurately guess how they were going to feel? Not really.
Okay.
What's interesting is the people who gambled a lot, they underestimated how disappointed they'd feel after a loss. Significantly more so than the people who didn't gamble as often.
Mm-hmm.
And the researchers, they actually found a connection between, this inability to accurately predict that negative feeling
Yeah.
and a higher tendency for risk-taking.
So you're saying if I think losing money won't feel that bad, I'm more likely to, go all in.
Yeah, potentially. Yeah. I mean, it makes sense in a way.
It does. But isn't some level of confidence necessary for good trading?
Of course, yeah. Confidence is key, but it needs to be balanced, realistic expectations.
Yeah.
Right, because overconfident traders, well, they might just underestimate how bad a loss could feel, and that can lead them to, take on more risk than they can really handle.
Yeah.
But on the flip side, you got someone who is, really hesitant, can't pull the trigger on trades.
Right.
Maybe they are overestimating the negative feelings, and then that leads to, missed opportunities.
That's true. It brings us back to regret avoidance then. Could it be that those, imagined bad feelings are actually, kind of protective?
You hit the nail on the head. Absolutely. Yeah. Sometimes just imagining those negative feelings, that regret,
Yeah.
it can actually protect us by making us think more carefully about the decision. It's all about finding that sweet spot. Confidence, caution.
Okay, so how do we put this into practice? What are some things our listener can do, right now, to manage those emotions when they're, making trading decisions?
All right. So if you find yourself making those, risky trades, try really focusing on how losing would feel,
Yeah.
Pause before you make that trade and just visualize it.
Uh-huh.
Imagine checking your account and you see it went against you. How's your stomach feel?
Oh, yeah.
That feeling, that's valuable information.
It's more than just the numbers. It's tuning into that emotional side of it, too.
Exactly.
Yeah.
And if you can anticipate those feelings accurately,
Yeah.
it can help you get better at managing your risk and, finding those high probability setups. Trades where the potential reward is actually worth the potential emotional cost.
It's all about weighing it all out. Okay, so just to wrap this all up,
Yeah.
we've got to remember our emotions, they're always at work, when we're trading, even if we don't realize it.
Yeah.
And the tricky part is, we often underestimate how we're going to feel about losing.
it's tough to predict the future, even when it comes to our own feelings. And so that kind of leads me to a question, something to think about. What if, instead of being afraid of those losses, what if we got better at predicting our reactions to them? How would that change our approach to trading? Would it make us more balanced? Would it make us more successful?
Something to ponder. All right, everyone. Thanks for joining us for another deep dive.
See you next time.
Catch you later.